Bitcoin. What even? How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today we are talking about Bitcoin. Now, as some of you may have heard, the value of Bitcoin just topped $10,000. This benchmark has got a lot of people thinking, and I know when I heard it, I personally had a lot of questions. So let me share those with you and some of the answers that I found to these questions. Because I am no Bitcoin expert, but I just wanted to provide a basic understanding to you guys of what Bitcoin is and sort of what cryptocurrencies are, just so you have like that baseline and aren't completely lost when people are talking about Bitcoin and stuff. So as I mentioned, Bitcoin is a cryptocurrency, and Bitcoin is actually the first cryptocurrency. And because of its popularity, it really created this huge like ripple effect of like all these other cryptocurrencies popping up. So you've probably heard of like a ton of other ones. So what is a cryptocurrency? First of all, a cryptocurrency is completely digital. There is no like tangible Bitcoin. You can't like have a Bitcoin in your hand. That's not a thing. It's all online. Everything Bitcoin is not tangible. It's all digital. Next, the value of a cryptocurrency is completely extrinsic. Cryptocurrencies have no intrinsic value, and basically what that means is a cryptocurrency is only worth as much as people think it's worth. Because it's completely digital and not tied to anything tangible, its value is completely dictated by supply and demand. So if suddenly there's a huge demand for Bitcoin, its value is going to go up. And this is what happened when it hit that $10,000 mark. A bunch of people decided they wanted to get in, so that value spiked even higher and reached like $11,000 in like the span of a day. So because it has no intrinsic value, investing in cryptocurrencies is a very, very volatile investment. It can really fluctuate very dramatically from day to day, and this is one of the reasons that I personally don't invest in any cryptocurrencies right now. Additionally, a cryptocurrency is a decentralized currency. So there is no bank of Bitcoin or any like single entity that is producing Bitcoins. This is very different from any other currencies like a dollar or a euro or anything. All of those are produced and regulated by like a governmental body or some kind of bank or agency or something. With Bitcoin, there is no central body dictating how many Bitcoins are produced and regulating Bitcoins. So you might be wondering, how is Bitcoin regulated? How is more Bitcoin produced? As a decentralized currency, that just makes a lot of questions that need to be answered about how this actually works. So let's start with where Bitcoins come from. So new Bitcoins are being created every day, and how that is done is through Bitcoin mining. Now, Bitcoin mining, broken down at its most simplest, is computers solving math problems get rewarded with Bitcoins. So let's expand on that a little bit. So you can't just start mining Bitcoin on your laptop today. You need a very intense computer setup to mine Bitcoin, and the computers that do mine Bitcoins take up entire warehouses. It is a massive operation to mine Bitcoin. And these math problems that these giant computers are solving are actually verifying the transactions of Bitcoin that are happening from person to person. All right, so an example. We've got Sam and we've got Alex. And Sam is going to buy a pizza from Alex by using Bitcoin. And Sam is going to pay Alex 1,000th of a Bitcoin for this pizza. So Sam sends Alex this 1,000th of a Bitcoin. And as this transaction happens, there is some computer somewhere actually verifying this transaction through a very complex math problem. And once it solves that math problem, the transaction happens, and the computer gets rewarded, or rather the owner of the computer gets rewarded with some fraction of a Bitcoin for helping to verify this transaction. And because there are people mining Bitcoin all over the globe, It's a very decentralized currency. Now, once this transaction is verified, it is added to the blockchain. And the blockchain is a huge ledger that has every single Bitcoin transaction in it. And this is just open to the public. Like, you can go online and find the blockchain and see like every Bitcoin transaction as it's happening, which is, I mean, it's pretty cool. Like, you can just go on and be like, this person just sent like 20 grand in Bitcoin to somebody. Like, what happened there? So to summarize what Bitcoin is, it's a cryptocurrency, the first cryptocurrency, which means it's a completely digital currency, not tied to anything, completely digital, like further than fiat currency, because it's not tied to anything, and its value is only dictated by supply and demand. It's also decentralized, so there's no central bank or government or anybody regulating Bitcoin at all. And Bitcoin is produced by Bitcoin miners who solve complex math problems to verify transactions and add them to the blockchain, which is the giant ledger of Bitcoin transactions. Now, a little bit of background on Bitcoin. Since it has just hit this $10,000 benchmark, I should mention that the history of Bitcoin has really just been a history of a bunch of bubbles and crashes. So a bubble is when something gets really inflated in price, and this happened with the housing market, and it's happened with Bitcoin a couple times. So with bubbles, eventually they pop, and when they pop, this leads to a crash. So a price just gets very inflated and inflated and inflated, and everyone thinks it's just going to keep going up until it pops and crashes. And this has happened with Bitcoin quite a few times, and that just sort of illustrates how volatile of an investment Bitcoin really is. All right, so on the practicality side, let's look at why somebody would want to use Bitcoin. So at its most basic, Bitcoin is a currency, and its intended use is to buy things. So one of the main perks to using Bitcoin to buy things is its anonymity. And because there is no central entity governing Bitcoin, the transactions that you make are completely anonymous, and your personal data is not connected to your transactions. Now, a lot of people worry that because there is no personal data associated with using Bitcoin, that it's just used for a lot of like illegal activity, buying drugs, buying weapons. But really this isn't the case, and for the most part, most Bitcoin transactions are fairly legitimate, but I mean, with all currencies, there's gonna be sketchy stuff going on, so I mean, can't really avoid that. Okay, so the next use of Bitcoin is trading internationally, or just moving money internationally. So getting money from one country to another is not free, and in fact there are some pretty high taxes and just regulations regarding moving large sums of money from one country to another, whether these be for like business reasons, tax evasion reasons, any number of reasons for moving large sums of money to another country. And with Bitcoin, you don't have these taxes and you don't have these huge transaction fees, since a Bitcoin is a Bitcoin wherever you are, and since it's not regulated, there are much less taxes that you have to pay, and just like regulations in general for the movement of large sums of Bitcoin from one place to another. And the last use of Bitcoin is to use it as an investment vehicle. And this is basically the approach of just buying some and thinking that it's going to appreciate in value over time, and just like holding on to it, not like using it to buy stuff. Basically just treating it as an asset. And I mean, if you bought it like 2 years ago and held on to it, I mean, kudos to you, and that would have been a very nice investment for you. But since it's such a volatile investment, I definitely would not recommend investing in Bitcoin until you've done your homework and done some very in-depth evaluation of why you're going to buy Bitcoin and what your plan is as to that investment. And just an important note here, Bitcoin is not FDIC insured, since it is not regulated and it's decentralized. So if the platform you use to trade Bitcoin goes bankrupt, or really anything like big happens, your investment is not protected in any way. So you could be like completely out on your investment and there's no one to turn to and be like, hey, where's my money? So there's that additional risk to take into consideration if you do decide to invest in Bitcoin. But if you're like, hey, this sounds cool, I want to get some Bitcoin, I want to see what it's all about, how do I do that? So what you got to do is you got to go to a Bitcoin exchange, and one of the most popular Bitcoin exchanges is called
Coinbase.
So basically, you make an account similar to as if you were making like a brokerage account or a retirement account or any other kind of investing account, and you deposit some dollars, some money, and then you can exchange that for Bitcoin at whatever the going rate is for Bitcoin. Now, this Bitcoin is stored in your digital wallet, and from there, you're free to just hold on to it or to exchange it for some goods or services or do whatever you want with it. I mean, it's pretty straightforward. It just works like any other currency, except for how it doesn't. So yeah, that's Bitcoin in a nutshell for you. Thanks for watching. I really appreciate it. If you enjoyed, please leave a like and subscribe to be notified whenever I put out another video. And for our question of the day, what do you think of cryptocurrencies? Something you're interested in? Something you're like, wouldn't touch that with a 30-foot pole? What are your thoughts? Like, leave them in the comments below, as always. And until next time.